The Dow with a pretty good day once again today, closing up about 250 points, 3218, a new record close. Drake and Associates, Brad Allen is with us on the First Midwest Bank Hotline. Hello, Brad.
Hello, how you doing?
Excellent. So I was kind of surprised because the jobs numbers weren't where we thought they would be, but the markets had a good day. What was behind today's growth?
Yeah, you're right. I mean, the U.S. economy added the 245,000 jobs in November, and it seems like a lot, but it was well below the Dow Jones estimate of 440,000. I think, today investors may have seen the weaker than expected number as kind of a positive because it's going to put pressure on lawmakers to kind of move forward with an additional fiscal stimulus. I think, we saw Senate Minority Leader Chuck Schumer tweeted today that the report shows the need for strong, urgent emergency relief, and it's more important than ever. So I think any news about stimulus, any news about vaccines that are the positive news are really going to make the market jump a little.
I want to talk about the pandemic with you. I'm amazed at where we are sitting here today. You look at where we were in April and in May and where we are now. Now, the last couple of weeks, there's been good vaccine news, but even, Brad, before the last couple of weeks, the markets kind of roared back in the midst of all the bad news mode. How do you explain what's happened with the markets in the midst of the pandemic?
Yeah, it's certainly been a roller coaster all year long, and there's been the news. I think the news of the presidential transition between President-elect Biden and President Trump really sparked the boost. And I think historically the markets really just do not like uncertainty, and any development eliminating some of that is going to help. And then, the COVID-19 vaccine and recent weeks, we've seen pharmaceutical companies like Pfizer and Moderna and AstraZeneca. They've all released positive news on the clinical trials of the vaccine. So I think the biggest thing I've been talking to a lot of folks about recently is really, a lot of people lost a lot of money in March, but we were lucky because the market came right back up. And really, it kind of depends on your risk tolerance. How comfortable were you back in March with the amount of money that went down? And if you're closer to retirement, obviously, maybe that woke a lot of people up. Maybe you're taking too much risk. Maybe you should pull back on the risk. What if that happened again, but it stayed down this time for a little bit longer? Could you get through something like that? So, a lot of positive news recently, but you do have to prepare for whatever could come around the corner next.
So, Brad, hey, it's Melissa. Markets up and down before the election, around the election, and a little bit more stable now. We're not seeing quite as many drastic swings. Do you have advice for people that maybe pulled back on their 401k around the election, and now things are looking, we still have the coronavirus out there and whatnot, but do you have advice for people that maybe want to be in more of a higher risk situation with their 401k?
Yeah, that's always a hard thing is trying to time the market. And a lot of people had pulled back on the risk at that time and not sure about what was going to come up next. And the hard part is, should you get back in right now while the market's back up at a higher point? And that's always the hard part about timing the market. I think the best thing you can do is really just look at, how close are you to retirement? If you're in your 20s or 30s, you can be aggressive even through a downturn, right? The market's going to go down, but it's going to come back up, and you have time on your hands there. But like I said earlier, the closer you get to retiring, the more you just you can't handle that kind of risk, right? If you lose a bunch of money right before you retire or early in retirement, you don't have the time to make it back anymore because you're starting to draw from some of these accounts. My best advice would be figure out your risk tolerance and meet with a financial professional, whoever's managing your money, and figure out what that risk means to you. Are you going to be comfortable if the market goes down? When are you retiring? How much money are you going to need at that time? What are your expenses? All these different things matter, and it's not the same answer for everybody. I think when you put a plan together, every plan's going to look a little bit different because everybody's goals are a little bit different. Everybody's in a different spot. So I think that's the best advice I can give is sit down, figure out what that risk looks like to you, and that's going to answer that question.
Hey, Brad, quickly, what happens in government will depend on what happens in Georgia. Do the markets in general favor split government where one party controls Congress, the other the White House, or do the markets prefer one party controlling all?
Generally speaking, history shows that the market really doesn't fluctuate all that much depending on Republican or Democrat. I think the market does like the fact that the House and the Senate are divided. Everybody was talking about a new tax plan and some of these kind of things that could happen. So we'll have to see what happens in January and which way it goes. and how the market reacts to that. I think we just don't know. We don't know what's going to happen on Monday, what news comes out, and how that's going to affect the market. So I think going back to that risk tolerance, I just think that's the best way to look at it and figure out, through the ups and the downs, do you have a portfolio that you feel comfortable with?
Drake and Associates, Brad Allen. Good stuff, Brad. Thank you so much.
Thank you, guys. Have a great weekend.
Yep, you have a great weekend, too. Here's Tom Newman with today's WTMJ Drake and Associates Market Update.